So at the moment, how do you see the market going, especially, with interest rates still going up and unemployment going still within reasonable limit? How do you see the market and the construction and the real estate market panning out?
So so it's an interesting one. There's always within any market, there's always opportunities, and it's about recognizing those opportunities and being ready to pounce on them when they're available. So within this market right now, obviously, material costs, construction costs are through the roof, but that's not going to be that way forever. A lot of people are predicting that they're not going to come off the levels that they are at the moment. I beg to differ. I think, it's supply versus demand. Once
Mm,
the supply increases and in terms of the labor force, we stop having, people off sick from COVID, and some of the supply chain issues that are also affected by, international events that are currently occurring. Once all that starts to slow down a little bit, I think will be deflation is going to happen fairly quickly. I think the government's reacting as they should, and with
mm,
the mechanisms and the levers that they've got in terms of using interest rates as I suppose, as a dampening effect on demand.
yeah,
But the reality is, I think it's that sledgehammer approach is going to have quite a negative effect once it comes off at the other side of it.
yeah.
Um, at the end of the day, so in terms of construction costs, um, whilst they're high now, they won't be at that same level in 12 months' time. What level they're at, it's anyone's guess. I would have thought from where they've grown in the last 18 months. So say, for example, there's a prominent construction company that do a lot of construction for townhouse developers around in the eastern corridor and the southeastern corridor of Melbourne. And though that construction company builds a lot of investment grade type of product, and they were building as a turnkey product anyway. They were building at about $1,800 a square meter about 18 months ago. That same construction company in this market is building at $2,600 a square
Mm,
meter.
wow.
So it's a substantial jump from where it was 18 months ago. At the end of the day, again, supply versus demand, what that does, it means that a lot of developers are choosing not to develop at the moment because they can't get things to happen to work.
Yeah.
So eventually that'll lead to a slowdown in the construction industry, which will then mean that a lot of those building companies and even the labor force providing labor to those building companies are going to need to rethink their own pricing strategies.
Mm,
And then essentially you would think that there will be a build up on the supply side because of the lower demand from the material companies and the manufacturers and also the retailers that provide the materials, that we should see some decreases coming in to the market there as well. So my thoughts are it could be anywhere up to about 20% as in a decrease in the
okay.
cost of construction in the next 12 months.
Yeah.
Other people have got quite different views, but that's my view.
Mm,
Um, so, but the problem is, as a developer, if you're going to buy a site, you can only deal with what the known elements are in property development. And the known elements are that if you're trying to do a feasibility and you're acquiring a site now, you've got to acquire a site based on what the property prices or construction prices are now. You don't factor in, unless you're doing real long-term projects like 10-year plus projects, you can't factor in price decreases, or even you can't factor on your costs. But you can't factor in at the other side of it as well. You shouldn't be factoring in price escalations or market value movements in the values of your property in 12 months' time.
yeah.
because it's a false economy. You don't know what's going to be happening in 12 months' time. You
Correct.
can make predictions, and more so, you should be conservative about your predictions. So your costs should be at least what they are now if you predict them for them to go down. And if you're not sure in terms of where the valuations are going to be of properties, if there's any potential that you think that maybe prices may be coming off a bit, you should be factoring that into your feasibility analysis as a potential risk. So, yeah, so my point of view, I think that there's opportunities there. I think there's going to be a lot of developers that have purchased sites maybe, 12 months ago, maybe 2 years ago. They've probably gone through the planning process, haven't been able to sell those, got the planning approvals, haven't been able to sell any products off the plan, may have not been able to get finance, may be working out right now that they just don't stack up. They may be looking at the opportunity cost of their funds. Their investors may be, maybe giving them grief because the project's taking a lot longer than what it was supposed to, and they've got diminishing returns and all those type of things. So there may be potentially some fire sales that might happen in these next 12 months. So that's when the opportunities to strike as a property developer and to take up potentially some discounted product that may be coming onto the market. It may or may not happen that way, but you've got to be prepared for it. I think there'll be a little bit that will happen. With all of that being said, and looking longer term, and particularly with some of the things that are happening from a government perspective and what they're trying to encourage, and them trying to build the labour force here also in Australia. Obviously, we've seen them announce that they're going to be increasing our immigration rates again, and essentially they'll be up over 200,000 people will be migrating to Australia on an annual basis. All those people need somewhere to reside. So they're either going to be renting something or they're going to be buying something. So that's going to be either put demand on the rental market, or it's going to be putting demand also on the acquisition side. Now, particularly with a lot of other countries where people come from countries that you can't buy freehold property, and you can only buy leasehold in a lot of countries, particularly a lot of Asian countries. The opportunity when they come to Australia and they see that you can actually buy a freehold property and that they actually own that title is quite attractive to them. So a lot of the migrating population will be attracted to, again, if they can afford it, they'll be attracted to acquiring a property as opposed to renting a property. So there are opportunities there in terms of that demand on the product.